cash is king. No, cash flow is king. No, bro, equity in deals is king. Dude, what is it? What wins? Is it cash flow, or is it equity in deals? Let's talk through. So cash gives you opportunity to seize deals right now, right away, immediately. You see something, you're able to jump on it, you can capitalize on it. That's a great asset to have. However, sometimes you don't need your own cash. It could be somebody else's cash. So if you have access to other people's cash, is your own cash king? Maybe not. Maybe it's second fiddle to someone else's cash. You don't necessarily need your own capital and access to your own capital in order to seize those deals if you know where to get capital pretty quickly from someone else. When it comes to cash flow, that's nice to have that predictable revenue stream coming in, hitting your bank account every single month, knowing that it's always there. It gives you a good, safe baseline to be able to pursue other endeavors, other opportunities if you have cash flow. Now I think about cash flow though from like the lottery winner, right? Like, would you rather have a lump sum today, or would you rather have cash flow over time? I know how to multiply money, so I'd rather have a lump sum right now instead of the payout over time, because I can take that and I can multiply it far more than what the ROI would be if they just paid me predictably every single month. And then there's equity in deals. And a lot of people, including myself, talk about net worth and building a balance sheet and their personal financial statement and what their net worth is. Now, net worth is important, equity is important, because millionaires and billionaires are made from equity in deals. But you can't pay bills with equity.
That's as good as money, sir. Those are IOUs.
You know, go try to pay your mortgage with equity. Go try to pay for coffee with equity. They're gonna laugh at you.
That's a car, 275,000. Might wanna hang on to that one.
Equity might not be the total answer, but it is a big part of the equation. And I think that's what we need to understand. It's not one or the other that is better. It's all three of those are very important to have if you want a tripod of financial stability. If you only had 2 legs on your chair, that thing's gonna topple over. You want all 3. I'm gonna take it off and then it's gonna fall and I'm gonna catch it.
Great success.
That's why you want cash, and I keep a certain percentage of my net worth in cash. It's definitely not more than 10%. It's usually between 5 to 10% of my net worth is in liquid cash. But in making sure that I have a good cash position, I make sure that I have people in my network, and I'm always refining those relationships and building relationship capital with people who have cash. So even if I am maybe equity heavy and cash poor based on moving some money around or jumping into a deal, I make sure that I'm never totally cash poor, because there's always people in my network that I can go to who I can raise capital from in order to jump on those opportunities that arise. And then I have a cash flow business, not just rental real estate. I actually don't live off of any of my income for my rental real estate. That all gets redeployed into more deals or into improving the existing buildings and into my operational side of things. I have another business that's more of a cash flow business, which is mostly my coaching, my consulting business, which I live off of. That's the income that I live off of. And then everything, it allows me to invest everything else, all the residual income and cash flow that comes from my rental real estate, back into doing more deals and building more wealth. And then equity is important because equity helps you gain access to more capital on the traditional finance side. So in order for me to get bank financing, they want to know that I have a big balance sheet. They want to know how much property I own and how much equity and what my net worth is. And the more your net worth is, the more people are going to want to lend you money because you're more bankable in that capacity. So it's not an either or, it's not a which one is better. It's all three of them are very, very important. All three are pillars to your financial empire. You gotta have cash or access to cash. You gotta have some sort of cash flow that creates stability in your environment. And then you gotta have equity in deals, because that's what's gonna build long-term wealth for you and your family. So hopefully this gives you some perspective on the financial world and what those pillars look like for you and where you should be focusing your time and where you should be focusing your attention. Because the reality is all three, in my eyes, are very important. I'd love to hear your perspective though. Go ahead and put it in the comments below. Let me know which one you think is most important, or if you think all three are important. and just any other thoughts that you might have on this topic. So appreciate you being here. Please do me a favor, hit the like button, hit the subscribe button. We're always trying to deliver as much value as humanly possible. If you know somebody else who would get some value out of this, please share the video. So appreciate you being here. Until next time, be your best.